Today we're going to examine our portfolio for the month of October. Today is October 4th, 2025. So we're about setting up our recording. What we're going to try to do is to give you two views. One on the cell phone device and another on the computer screen. So depending on where you're watching it from, you should be able to get a visual representation of what exactly is happening. If you want to see the big screen, then feel free to join us on the big screen view. All right. The vertical view will just give you so much as a phone will provide, but if you are more prone to doing it horizontally or on the big screen where you can see everything, then you may want to watch our longer form content so as you can get the essence of what we're talking about. So today I want to tell you the two main brokers that you should consider getting if you're a new person starting in investment or you're on your investment journey. The two main brokers that I want you to consider are Moomooo and Webull. Yes, you heard me say that. Moomooo and Webull. These are the two best top brokerage to invest in my opinion, in the United States. Number one, the reason why I like these two brokerages, they are commission free. There are no cap. As they say it is, that is what it is, right? So if you're doing stocks, which we're going to be doing in the future, options, which we practice mainly, then this is for you. Webull offers futures and also cryptocurrency trading. So if you are into cryptocurrency trading, then this will be something that you can explore. The thing we like about Moomooo is that even though it doesn't yet offer cryptocurrency trade, not cryptocurrency, but the futures trading, it offers cryptocurrency trading. So if you have cryptocurrencies and you want to trade those, then you can do that on the Moomooo, and all those are fee-free trading. It's not like legacy brokerage, which charge you a premium like 65 cents per contract or something to that effect to get into certain position, to get out the position. They don't charge you on that basis. They get paid based on the order flow. So the more persons use the platform, that is how they would get their compensation. All right. But even with them being fee-free, what you should remember is that the different regulatory authorities have fees in place that will somewhat cost you, but it will not cost you as exorbitantly as the legacy brokerage. So this is why I'm recommending these two platforms. And Moomooo also has something very phenomenal, something that is top tier, and it is the algo trading. So if you have an analytic mind, if you have picked up a pattern and you want to implement that pattern in your trading style or trading methodology, then you can create an algorithm, and that algorithm will execute on your behalf without you being present, as long as the keys protocols are hit. So once that is done, then you're good to go. All right. So those are the two main brokerage that you should consider getting, and those are the reason why, the main reasons why. There are other reasons, because the Webull allows you to open it with a social security, and you can open it with an ITIN. The Moomooo, you have to have a social security as of now. The Webull allows you to have a ROTH IRA, which is one that we encourage any new investor who is thinking about retirement to consider getting. You can open a traditional, you can open a joint account, you can do so much things on Webull. Webull is the standard for what brokerage should be about, and they also have events trading, but Events trading, in my estimation, is not really trading as in commodities. It is more gambling, and we are not really a fan of that, but it has that just peradventure you wanted to know. Now, let us get into the Webull account to see where we are currently. So if you're looking on the phone screen with me at this time, you'll be seeing that we are currently down in majority of our positions, and we are heavy in SoFi. Yes, you heard that right, we are heavy in SoFi. But we want to show you something. We made some modification. Let us enter our password, and we're now in. So as you can remember that a few weeks ago, maybe a week ago, our account was maybe at about 11,000. We are now down to $9,981.25. But we're down more than that because we added $1,000 to the account. All right. And we transferred, what you should know, that we transferred cash from the cash account into our ROTH account, because this is money that we are not going to be touching at this juncture. So we transferred about 5,000 into the ROTH account. We entered a position, and we're down on that position by 6%. That's okay. We're still not fully invested just yet. We are waiting for the market to fall a little bit more. So if we look at our new portfolio position, we have divided our 10,000 into two areas. We took the money that we had in the regular account, and we're transferring that money into the ROTH account. All right. So this means that we have already put in place to pay taxes on the profits that we would have gained from the regular account. All right. So everything you do, it has to have some tax planning involved. So the reason why we're using the ROTH account is because the ROTH account allows your money to grow tax free, not tax deferred, tax free. So basically, when you get compensation and you pay tax on that, after you have put that sum into the ROTH account, what happens is that that capital is allowed to grow tax free. So all your gains plus the capital, that there is tax free upon withdrawal. The traditional account or traditional ROTH account is one that is tax deferred. So basically, it makes you appear as though you earned less money when you contribute to it. However, in the long term, when you're going to withdraw from that account, you have to pay tax on the money that you have in that account. So there's a caveat. If you don't plan to use the money in this season, and you don't really need any assistance in multiplying your resources, then the ROTH account would be best for you, right? But if you think that you need assistance, you need someone to tax you after you have made all the strategic moves and you have been profitable, then you have to decide which account is best for you. So there are just two accounts that you need to really be concerned about. I have a traditional account, and the reason why I have a traditional account is that I use that traditional account to do ROTH conversion. All right, so I can use it to do a rollover, or if my tax bill is too high and I want to reduce it a little bit more, then I defer some of the capitals into the traditional account so that I pay less tax, because my income would now be reduced. So that is the idea of this type of account, and it all comes in strategic management of our resources. So let us pull up the account on the computer screen. So this is what the account looks like on the computer screen, and you can see this is the individual account as we're looking at, and you can see the different positions that we are currently in. You can see all the deposits that we have made, and you can see how much cash we have settled. So this is what we are currently looking at, and as is indicated, we are at $5,105.48 in our individual account. And if we move over to our ROTH section of the account, we will realize that we have 4,800, and let's go to the ROTH section, and $75.77. And you see the positions that we are trying to get into. So the positions that we're trying to get into are up order. The SoFi calls for 2028, and we would like to pay $500 at max for those calls. If not, we're going to have to reevaluate and see what is the best price. We're also looking at the 2026 option calls, but those would be just for a momentum play. And for these, we will not be paying more than 75 cents for them. All right. Worst case scenario, we would pay $150 for them, but 75 cents is what we would really like ideally to pay for them. So this is our current account, and the traditional account, we have no money in it just yet because this is just per adventure. I should let you know that in the traditional and the ROTH account in the year 2025, if you are below the soon to retire age, about 60, they're about 65, I think that's the age that you can retire. If you're a regular person below the close proximity to retirement, you are allowed to contribute about 7,000. If you're closer to retirement, you should be able to contribute about 8,000 for 2025 period. So just bear that in mind. And if you contribute to your ROTH account 7,000, you cannot contribute to your traditional account 7,000. So you can't put 14,000. So both accounts combined will be whatever is a designation for that account. So as we talk about brokerage, if you have two different brokerage with the similar accounts, you have to be very mindful that you do not over contribute, because there are penalties on over contribution. So please try to avoid doing all of that. All right, but whatever you do is in your best interest based on your time horizon and based on what you desire. All right, and the less interactions you have with the revenue service department, it's better for you. So now let us look at our watch list. Not our positions, we're going to look at our watch list. And there are some companies that I want you to take a note of. These are our speculative plays. It's not really speculative as in speculative, but it is speculative in the fact that we have been watching these companies and we think that these companies can give you a high rate of return compared to the traditional investment vehicles if you invest in them independently and based on the current market sentiments. So Rich Tech AI, that company is priced at $6.18 at current. Sound AI, we have Open, we have Resolve. These are just for a speculative play. They can give you fast increase in a short period of time. So we're seeing that the stock for Rich Tech AI has jumped 19%. That's $1. just like that. All right, it was down a lot and now it's up by 19%. So these are the kind of moves that can be expected. In our excursion. All right, so these are some of the stuff that you can consider to enjoy doing, and you can play with these if you so desire. If you're not really in the playing around, then we can just stick to our basics, stick to our bread and butter. But the idea is for you to learn, and when you learn, you are in a better position to earn. So some other stocks that we have been watching, which were under $5, I think, were Wolf. It was under $5, but the price had changed. It is a PSNY, EAF, SQNS, NAK. So those are just some of the positions that we have been watching, but as time progresses, the prices will change. And now let's move to our watch list. These are all the companies that we have been watching over the period. We have 41 companies that made it on our watch list. So you can just take a list of these companies, research them, and see which companies you would like to invest in. But if I only have a few moments with you, I am just going to share with you the companies that I would suggest that you consider. If you don't want to go through the whole list, I'm going to give you my favorite. Number 1, BBAI. Number 2, APLD. Number 3, SoFi. Number 4, Bull. Number 5, PLTR. Yes, PLTR is overpriced, but that is just a company that you can still invest in. Number 6, Nvidia. And these are not in any specific order. And my favorite but least favorite performer in this category is PayPal, which has been underperforming the market exceptionally. It's not overperforming, it's underperforming, which means that it has not been doing what it is supposed to be doing. But we're expecting that it will get a move in 2026. The latest 2026, if it's not in doing anything in 2026, we're going to have to exit our position, because we have our biggest loss currently on record in PayPal. Not because it's a bad company, just because the stock is not moving in line with the projections of the company. All right, but now it is a good price to buy, so we are going to continue to accumulate at different positioning. All right, so these are just some of the companies that I would suggest to you to just take a look at and see if they fit your profile, because I know that everybody has a different risk profile, a different risk tolerance, a different appetite. So you have to find out how your appetite is, and based on how your appetite is, then you decide what investment style is best suited for you. All right, so now let's get into my very favorite company that I like to talk about, and that is, oh, not that one, SoFi. So let us pull up SoFi on our phone. Oh, and then while searching for SoFi, I just realized that there was a company that I should have added to my watch list of speculation, which is microtechnology. I should have invested in that some time ago, but it slipped me. And there are so many companies. So these are not the only companies that exist. There are other companies that exist, but you have to just understand the pattern, understand the moves, and then make a decision based on what you are seeing. So right here, what we are looking at is SoFi. And for the last couple of days, 1, 2, 3, 4, 5, 6, 7, 8 days, we have seen SoFi taking a downward trajectory, and that there is good, but yet it is bad for the short term but good for the long term, because this here, even though it is moving down, it is actually giving persons who have not yet entered a buying opportunity. So the price that I would encourage you to consider making an entry, providing that it reaches, is, we have it at 26.69. That's a good price to enter. It's below that now, so we're looking at 23 would be a good price to enter, because that there is on the support. And we also, if it goes even further to $20, then I'll be scooping up as much as I can. If it goes even further to 17, then I'll be loading the boat. And if it goes even further to $10, that is when you know that it is game over. We have to get as much as we can get. If it ever goes back to the single digit, like $2, man, oh man, you can quadruple your money when it begins to run again. Because as we have done our due diligence, and we have come to the conclusion that this company is currently undervalued for its projections. And we like how the company has been progressing. It had some down years, but it has came out of the rut of what was this? We had what? It had $6. It was in the rut of $6, but it came out of that rut, and now it is all the way to $25 after touching its all-time high at $30 plus. All right, but it has a lot of room to run. We're expecting that by the end of this year it should be at least about 35. So if you can catch it at 25 and ride it up to 35, then that there is a nice percentage increase for you. All right, so that is just something that you should look. So before I make my final entry, I have to get some form of confirmation. But based on the trajectory of this market, it's telling me that the market wants to give off a little bit more before it progresses upwards. So if we look at this chart, this is a chart that most persons tend to use, but I don't use it. I only use it for reference purposes, so that persons can have an appreciation and they're not lost as to what is really taken place. So this is the, what we call it, the chart. It's the line style chart. So that is what it is, or the candlestick chart. Yes, that is what we have right here, the candlestick chart. And this here is the Japanese or the Chinese chart. This is the one that I prefer to use because it's so simple. Red means it's going down, green means going up. We don't need to complicate stuff, you know. And based on how we trade or we invest, we don't need to see the initial the exact movements. We just need to see the movement over time in increments. All right, so that there is enough for us to digest and move forward in our trading ideologies. So this here gives us an insight as to what is possible. But with this stated, when we get confirmation that there is going to be a change, so what we try to find is the indecisive candle, and then we look for the green bar. Indecisive candle, green bar, that's confirmation that the move is going to change. All right, so indecisive candle, look for the indecisive candle, and then you look for the green bar. So indecisive candle, green bar, it's going to go up. So don't allow the market to trick you or to fake you out. Indecisive candle, red bar, it's not ready. All right, indecisive candle, green bar, is going up, come down, it's going up. All right, so just understand those simple patterns. And when you see that, then you know that that's my cue to enter and watch to see the directionality of the market. So that there is something that I want you to consider. So now, for what we practice, what we want to really do, we need to find inefficiencies in the stock. And as we have indicated, our price target for this company is 35 minimum. That's our bear case for 2025. Our bear case for 2026 is $45, and that is bear case. That's 2026. For 2028, our bear case is $75. But I am gonna let you know that even though these are bear cases, it can overstep the bear outlook within one trading session. All right, you see, the higher the stock climbs, the lower the percentage change needed for it to increase incrementally. So if a stock is at $1, it would have to double, like go up 100% in order to be $2. Now it is at $2, it has to just go up half now to get back to another $1, so 50%. So you see, so it has to go do less work because it's carrying more weight. So it can double, it can increase. So once it passes the $50 mark, it doubles even faster. And then when it reach $100, everyone should be happy who got in at on the ground floor. The ground floor would have been at $6, $8, $10 in the single digits. That there would be the ground floor. This now is level 2, the second story, and many persons will not even try to get in at level 2. Most persons is going to try to get in at level 5, and then they're going to swarm, bomb rush when reach level 10. Level 10, it has mature. Most persons don't even like the adrenaline rush, so we understand how the system is designed. So you have to just understand what you like, what you want, and work in that regard. So now let's get into our favorite section, which is the options. So we're in SoFi still, and we are seeing the data that is being presented to us. But let us go into options, click on options, and now we can have a good look as to what is taking place. So the 10th options will expire in 6 days, and we need confirmation before we put down any position. All right, currently the market is heading down. Even though you may see green and red, the market is still heading down. We have not gotten yet a confirmation that the market is ready to turn for this stock, not the whole market, but this stock, in the other direction. But confirmation will be coming shortly because we have earnings that is on the horizon. And right before earnings, this stock has a tendency to deflate. And after earnings, it tends to consolidate before it makes its move upwards. All right. Or if it consolidates during earnings, if it runs up during earnings and consolidates, it consolidates for a few days, maybe even a week, and then it shoots up. All right. So now we're looking again for it to have earnings, which is scheduled for the 28th of the 10th, 2025. So if you are interested in playing the earnings, I wouldn't advise you to play it on the day of earnings. I would advise you to play it like 2 weeks after earnings. All right. That way you can get probably a lower premium, especially being that the market is coming down. I think that this earning will be a blowout earnings because the traffic has been increased to the website, the signups has increased, they have signed sports personality. There has been a lot of promotion. There is now the sports game in play for which the athlete was signed. So there's a lot of things, moving parts that are taking place, which is catapulting the growth and the trajectory of this company. So we are looking for, maybe this goes back to all-time highs after this earnings, and then in December we're expecting it now to make the next push up to 35. This may even reach 50. Well, 50 is a stretch for 2025, but it may even reach 40 in 2025. But let us see how the market reacts to the news that will be presented. All right, so I would not touch anything here unless I see a change or I'm trading within the day. All right, excuse me. Now for this October 17th, if you are thinking that there's going to be a run-up, you can go for your calls, but I would not play this until I have some form of confirmation. There needs to be an indication of the direction. All right, so that is something that we are looking towards. Now, the position that I want you to get into as the price comes down to something that is substantial and reasonable. We indicated that in 2026, we're expecting SoFi to be at least about 35. All right. So I would suggest to you at this price, you can go, let's go to 2026 on this computer screen. And we're going to go into March 20th. And we're going to scroll down all the way to, if you want, you can take 36. I'm in 36, but I think 35 would be a good position to be in. However, for you, I would not tell you to go anything below 40. So look where the delta is. Look where the delta is. Don't take a delta below 40. 40 is a worst case delta for you. I can take lower, I can take even the 10, I can take whatever it is that I want because I know the risk. For you, the safest delta would be 70, which would be in the money. All right, so you'll be making money as it goes up, but you will not be making that greater money. You'll basically be paying today's price and increasing today. But you don't want that. You want some momentum, you want some validity, and you want some increase. So I would suggest you to get into at least a 50 delta, which is a 50-50 chance of occurrence. That's what I would suggest to you. So 26 is gonna be above 26. We already know that. We know that it's gonna be, well, we don't know that, but we are speculating that it's gonna be above 30. We have an idea that it is possible. 36 is a little stretch, but this is our bear case. All right, so if it can beat that bear case, then we'll be in the run-ins for great things. All right, and that there is just a position that you could do. And look on the graph, just click on the graph to see how much it has increased or decreased. And you can see the trajectory of the graph. If it has been coming down, what's the lowest price, and you're going to try to get it at a reasonable price. And the lines that I'm using on this graph, if we go to the quote, let's go to the quotes. So this is a graph that we're seeing. So the lines that we're using on this graph, if you're looking at it, are the pivot lines with the resist R1, R2, R3. Those are the resistance, S1, S2, S3. Those are the support, which means that there are adequate buyers and sellers in those areas. So if you are strategic, then you can position yourself in that realm to get that move. All right, So that there is one position that you can consider. Another position that I would consider for persons who don't quite have the money just yet and you're waiting for the money to come clear, then you can try to get in at $40 for $500. The strike price of 40, $500 I'll pay maximum. Well, ideally $500 is what I think is a reasonable price, because I think now that 45, it will reach 45 by 2026 plus or minus. If it doesn't reach then I really don't want to be in this for the long haul. If it passes it, which we expect it to do, then we'll be in a good position. So this is where I would position myself. I'll continue to work and add capital as is needed over time as I increase gradually. All right, so this is going to be the January 2028, and we're going to put it right there. All right, what if I don't want to wait until 2028 and I want to see things in maybe 2027? Let's look at 2027. So we'll look at January 2027, and for January 2027, what I would recommend that you would go to at least $45. Go to at least rather $35. If you're going to January, go to $35. That would be a good position to be in. All right, so $35 call, and a fair price would be maybe $350. I'm looking at $350 per contract would be a fair price in my estimation. But let me see what the prices have been so far. Okay, so these prices have bellied, started at 300, it bellied down to 100 to 23 cents. Wow. And then it bellied up all the way to 700, and I think a fair price would be right here. 110 would be the ideal price. However, if it doesn't come down, if the stock doesn't fall further down to about here, then we're going to have to take a higher price. So a fair price at this stage would be $3.50 would be okay. $2.50 is okay. $1.50 is all right. If you can get it for $1.50, that is going to be ideal. All right, so those are some prices, and it all depends on when you're going to buy it. I want to teach you as much as I can so that you don't need me to make these decisions, these moves on your own. You can look at any stock and make a move independently. So these are just some things that I want you to know, understand they are possible. And once you understand that they are possible, then you can execute and you can control your office as the CEO in the way that you desire for it to be controlled. So these are just some insights that I want to share with you. And I want to also let you have APLD on your radar. The last good time to buy APLD would have been at $14. The last good time to buy APLD would have been at $20. We don't know if it's coming back down. If it comes back down to 20, that's a good entry. If it comes down to 15, that is a ideal entry, because this stock, I see this as a $35 stock as well. All right, so if you want to play this one as well, you can use the same principles that we're using with SoFi and put it into APLD. Another stock that I would recommend, especially if you don't have a lot of capital, is this one of my favorite, BBAI. So BBAI was on a run, it came back down, and then this was a good entry price, $6.44, good entry price. We're expecting to climb to at least $8.56. All right, and if it cannot break it, it's going to come back down. It may come back down to this, or it may go break that and go down to $4.64. So the $8.41 is where you want to be ready to jump off that train. All right, if it does not break this resistance, all right, just bear that in mind. And you have to know how you're going to set up your option entries. So if you want to do stocks, you can do stocks. If you want to do options, you can do option. So for my option play, I would go to 2028. Do we have 2028? I'll go to $15 and I'll pay $250 for this. I have no problem paying $250 for this. That is reasonably priced. 200 would be ideal, but 250, I have no problem paying $250 for this stock at this price. All right, so that is where I would go. And speaking of that, let me just put that down right now. So we're going to try to get this at 250. Let's see how much could we possibly get. Let's try for 10 and see if we can get 10 contracts. Okay, we need to add more capital to get 10 contracts. So let's go in our calculator and see what it is. How much do we need to make available so that we can get this contract? So 250 times 10 is 2,500. Okay, so we're gonna allocate 2,500 to BBAI at 250. All right, it may not go, it may go. Whatever it is, we'll just allow it to do what it needs to do. All right, so that is just something that we're going to do, and we're going to be playing this in our ROTH account. All right, because it's a longer term, we're just going to play it in a ROTH account because we really don't need to trouble this position in this season. And if it starts to go sideways, then we just get off this train. All right, so that is just something that you can consider. If you don't think that this is a good stock, you want something that is actually moving, then another stock that is moving that you could look into is wood. Wood is a good trade. All right, if you understand this chart, you can trade wood and you can make a lot of capital from wood. All right, so this stock has to go back to 159. When it reach 159, it's going to test this. So from here to here, that's $10 move. It's going to try to test this. If it doesn't break this, then it's going to come back down. How far down it's going to come, we are not sure, but it's going to try to go again because this stock here is trying to reach $200. It may do it in 2025 or it may do it early 2026, and that is just something that you can consider. So there are many ways to get an increase, but you have to select what is best for you. With that said, I hope that this information was meaningful and beneficial, and see you in the next sitting. Have yourself a money-filled day until we meet again. Be blessed, my friends.